Imagine a future where entire cities fall silent. Schools shut down, not because of budget cuts, but because there simply aren't enough children to fill the classrooms. Hospitals are full, not with the sick recovering, but with the elderly in need of permanent care. Governments, once boasting of economic growth, are drowning under the weight of pensions they can no longer afford. This isn't science fiction. It's happening right now. What might this mean for your pension or investment portfolio? With a reduction in consumers and changing age groups, what might this mean for the future? Japan, one of the world's most advanced economies, sells more adult diapers than baby diapers. China's population shrank for the first time in over 60 years. South Korea's fertility rate, a shocking zero point 0.7 children per woman, far below the replacement rate of 2.1. Welcome to the age of population collapse, a demographic shift so powerful it will redefine investing. And here's the kicker. While most people will panic, a select few will position themselves to profit. In this video, we'll explore how population decline will impact everything from housing to healthcare, from government debt to stock markets, and finally, we'll uncover where the smart money should go in a world with fewer people, but bigger economic challenges. The coming population collapse. Let's start with the numbers. In 1950, the global fertility rate was around 5 children per woman. Today, it's just 2.3 and dropping. By 2050, according to the UN, two-thirds of countries will have fertility rates below replacement. What does that mean? Populations shrink when there aren't enough births to offset deaths. Japan's population peaked in 2010 at 128 million, but by 2100 it could fall below 75 million. This is like erasing the combined populations of Tokyo, Osaka, and Nagoya. Meanwhile, China faces an even steeper cliff, from 1.4 billion today to under 800 million by 2100. This demographic shift represents the biggest reversal in history. For centuries, economists assumed populations would always grow, driving labor, consumption, and innovation. Now that assumption is breaking. Why do demographics matter for the economy? Because demographics are destiny. Fewer workers mean slower growth. Aging populations lead to higher costs. A shrinking consumer base results in lower demand. This will lead to a government debt crisis. So, how will these changes play out across industries? In housing and real estate, falling populations mean less demand for homes. This trend is already happening in Japan, where entire villages are left deserted. In healthcare and elder care, however, we see one of the few growth industries. Aging populations require more drugs, medical devices, home care, and assisted living services. Education is also affected, with fewer children leading to school closures and reduced demand for universities. Countries may pivot their education sectors toward lifelong learning and retraining older workers. Manufacturing and automation worker shortages are driving a significant shift towards automation. Robotics, AI, and productivity-enhancing technology are set to experience unprecedented growth. Investors in automation companies could see outsized gains as the industry expands. Stock market performance has historically correlated with the size of the working-age population. As populations age, equity markets may stagnate unless offset by global flows. The global divide means that population collapse won't impact all countries equally. This divide will lead to a massive global wealth shift. Capital will flow where people and demand are growing. Population collapse is the silent disruptor of the 21st century. It won't happen overnight, but the trend is inevitable. Investors can't fight demographics, but they can ride the trends they create. Those who ignore the shift will find their portfolios stagnating with dying economies. Those who anticipate it, investing in healthcare, automation, emerging markets, and the silver economy, will profit. Will you be a spectator of decline or a strategist for opportunity? The future won't look like the past, and investors who prepare today will own tomorrow.